Welcome to the Dairy News and Views podcast, a production of the Iowa State University Extension and Outreach Dairy Team. Our podcast covers current educational, research, and industry tools available for your operation to manage healthy cows and calves while producing the highest quality dairy products. Well, thanks for joining us today on Dairy News and Views from the ISU Dairy Team. I'm Jen Bentley, Northeast Iowa Dairy Field Specialist, and I'm here today with my colleagues Fred Hall and Larry Tranel, both Dairy Field Specialists in Northwest and Eastern Iowa, as we discuss today's topic. And they both recently hosted an ag lender seminar to provide ag market updates to our lending communities with a focus on dairy market outlooks. So welcome back to our podcast, Fred and Larry.
Good to be here.
Thank you, Jen. Yep, good to be here.
So we are also joined today by one of our presenters at the Ag Lenders Seminar, Dr. Bob Cropp, Professor Emeritus at the University of Wisconsin-Madison. Dr. Cropp has provided dairy market updates to the Ag Lenders Seminar for over 30 years and gives us and our audience a great perspective and understanding of the dairy market. So welcome to our podcast, Dr. Cropp.
Well, I'm glad to be here. Thank you.
So Dr. Cropp, could you give us an overview of what happened to dairy markets in 2020 and how that now has played into 2021 pricing?
Sure. In start off of 2020 in January, all forecasts were for it to be a very good year coming up in 2020 with milk prices averaging stronger than the year before. But we ended up with a record price volatility that dairy farmers never experienced before. And the reason is two main factors. One is we know that starting in January and February, we got COVID-19. And that really disrupted things because by March, we were shutting down all the restaurants and the schools, conferences, and everything was being canceled. And that had a big impact on the demand for dairy products. About half of the butter and cheese goes through restaurants and that. And so when they shut down, milk plants found themselves taking in milk, making product, but they couldn't move all the product because of the loss in market. So we ended up with quite a surplus going on. So dairy cooperatives, some of them put in a base plan to farmers, which meant that they would pay a market price for part of the milk, but a low price or not as much for the extra, try to encourage farmers to reduce milk production. And some farmers are actually asked to dump their milk. By May, production did drop below year-ago levels. Farmers responded. The price of milk, class 3, the milk goes into cheese, base price was over $17 in January, but by May it had dropped down, clear down to a devastating $12.14. Farmers were really hurting. The government took action and implemented the Farm to Families Food Box program, whereby the government reimbursed dairy companies to buy up dairy products to be used for food banks. They bought predominantly cheese, and they had 4 of those programs in last year. The first one started in May and ended to the end of the year, and one of them that continued into this year, January to May. Well, what that did is it resulted in tremendous volatility in the cheese market, because when they come and buy a whole bunch of cheese right now, the price of cheese would go way up, and then they stop buying and come back down. For example, cheese was $1.90, 40-pound block cheddar cheese was $1.94 a pound in January. By April 15th, it was $1 a pound. That's quite a drop, devastating. But come back then in July, it was back to $3 a pound. So we had the class 3 price over $17 in January, and I said down to $12.14 in June. By July, or in May, in June it was over 21. By July, we had a record high milk price here, the highest for the month of July, over $24 a hundredweight, and then it dropped back down to about $16 in September, and November up over 23, another record, and end of the year at $15.72. So tremendous volatility, which created problems for farmers to cash flow under that. However, the class 3 or class 4 price, which is butter and powder, didn't change much because the government wasn't buying that product. And we ended up with a big gap between 3 and 4. That created a problem called negative producer price differentials of farmers. I would give my monthly dairy outlet and say we got record high price here in June, and farmers say, "What the heck are you talking about? I got those big deducts coming out of the milk check." Milk pricing is more complicated than any other commodity. Most of the milk is priced under federal milk marketing order. We have some cheese plants that are not in that and not affected. But every month, kind of complicated here, but every month there is a price set for class 1, which is milk we drink. Class 2 is ice cream, yogurt. Class 3 cheese, class 4 butter and powder. The class 1 price is based off of an advanced class 3 and class 4 price. I say advanced. A bottling plant needs to know what it costs them for milk, because you milk the cows today and it's in the store tomorrow. They need to know what to charge the plants. So that's priced about the third week of the month prior, like November milk was priced the third week in October. Cheese, butter, and that doesn't move to the market that fast. That is priced after the month. So we won't know what class 3 price is for November until about December 5th. So there's a 6-week lag between the class 1 pricing and class 3 and 4. When you get a big run up in the cheese price, like we just mentioned, we find the class 3 price shooting way up. But the advanced class 3 price is not catching that increase. It's 6 weeks behind, it's lagging way behind. And to make matters worse is that the class 4 price stayed well below class 3, as much as $11 a hundredweight. So the average 3 and 4 was way below the class 3 price. So we ended up with the class 3 price way above the class 1 price. Now, normally farmers are paid on all their milk, the class 3 components, the price per pound of protein, butter, fat, and other solids. Then on top of that, since part of their milk is used in a higher value of class 1 and class 2, they get an extra higher value as a price per hundredweight called a producer price differential. That's a positive factor. But when you end up with class 1 lower than class 3, rather than getting a positive value, farmers saw these negative producer price differentials as much as $4 to $5 a hundredweight, and it was really devastating. What helped farmers last year, though, to overcome some of this was some of them were signed up for the dairy margin coverage program at $9.50, protecting the margin, return over feed costs, and those that did got about a 64-cent average increase in milk price over that time period. And the government also had the coronavirus food assistance program, direct payments to farmers that averaged about $2.45 a hundredweight. That extra money and some stronger milk prices towards the end of the year, especially it fell off in December, but in October, November, farmers did start responding to that. And so going into this year, farmers started increasing milk production in the year, putting downward pressure on milk prices in 2021. The other thing, though, that's going on, the price of butter and non-fat dry milk, I'll come back to do the exports and other things, have really increased, so that we've now narrowed the gap between class 3 and class 4. So as of June of this year, we no longer have negative producer price differentials. Farmers again seeing a positive value in milk check rather than a negative. And the only thing I point out is prior to 2019, the class 1 price was based off the higher of class 3 and class 4. They made a change in 2019 to take the average of 3 and 4. They helped the class 1 bottlers to be able to use risk management tools, those are complicated. So we take the advanced 3 and 4, and we add a differential like $1.80, $1.60, depending where the milk plant is, to get the class 1 price. That was a mistake when that gap occurred between 3 and 4. So there's a lot of talk right today to change federal milk marketing orders, maybe go back to higher up, or completely make some changes in federal milk marketing orders.
Dr. Cropp, we understand that 2020 was a difficult year in the economy, but dairy producers fared pretty well for a couple of reasons. What do cow numbers and production look like for 2021?
Okay, as I indicated that starting in July, because milk prices are better in July, farmers start expanding the dairy herd nationwide. And that continued into this year until May. Since May now, cow numbers have declined. The last production report is September. We'll have one next week for October, but we've dropped down about 85,000 head of milk cows from May to September. And I expect that will continue the rest of the year. The big reason for that is, tremendous drought, particularly in the West, and tighter feed supplies and higher feed costs. Farmers in the West, particularly, are seeing a decline in cow numbers. Not all Western states. I'll come back to that. It varies. And we're not seeing that going on here in Iowa and Wisconsin right now. I'll come back to that too. But overall, cow numbers are down. The other thing is that milk production per cow is doing very well. January through March, that first quarter, it was averaging about a 1.8% growth over a year ago, which is strong. Normally, cow production goes up something like 1.2, 1.3. Unusual due to higher feed prices and also some weather-related issues, very warm temperatures, particularly in the West again. We found production per cow actually fell below a year ago, about 0.2 below in August, and September was 0.6% below a year ago. So milk production started out the first quarter, January through March, only up about 1% because a year ago it was still pretty high. But then April through June, since it was lower a year ago, it was growing 3.7% higher. Milk production coming on very strong. But now with cow numbers declining, production, we saw August production only up 0.6%, and September was 0.2. So I expect that's going to stay pretty low here for the rest of the year, and that's positive for milk prices.
So how have milk prices fared during these changes, looking through the rest of 21 into early 22?
Oh, yeah, well, we found that with the milk production declining like it is, well, it's been volatile, it's been volatile, but not nearly like it was. We had in the 17 to start the year, we did get down in August like 15.95, but since then, milk prices have been strengthening as this production has slowed and demand has been pretty good. So I think October we were 17.90. Tuesday, I gave my outlook there at the lenders conference, and I said, "Jeepers, maybe I'm high." I got November and December price about 18.65 and 18.60. When I was saying that, the price of cheese had dropped about 16 cents a pound, and the futures market dropped below 18. Since Tuesday, the block cheese market has come back 21 cents. We're back to $1.80 cheese. That shows how this market responds and bounces around. And we've had very strong growth in the butter price. It was about $1.70 at the start of October. We're almost $2 today. And non-fat dry milk was $1.40, and it's now $1.56. The other thing I would point out is dry whey, where it depends upon the international market. Dry whey, about 60% we export. And China has come back in the market buying dry whey. So the price of dry whey has gone from 40 cents a pound a year ago to 66 cents. That has added $1.50 to that class 3 price. This shows how sensitive this market is to a small change, $1.50. So the class 4 price started out the year about $13.75, and now we're looking at the class 4 price in the 18s and maybe even reaching 19. And so we do not have that gap between 3 and 4, so no longer a negative producer price differential. So for the year, I think we'll end up with a class 3 price averaging about $17.10. It was $18.25 last year. But remember, farmers didn't get all of that because of the negative producer price differentials. And class 4 was $13.49 last year, and I think it'll average about 16. So we're ending up with a pretty good year milk price wise.
Historically, if we see class 4 above class 3, are there any repercussions that happen?
Well, that happens. I mean, it's simply because the stocks of butter have fallen way below a year ago levels, and butter sales have been very strong. So we got a real strong increase in the butter price. And we have a very strong export market for non-fat dry milk. And so those food prices are shot up more relative to the price of cheese. And so we end up with class 4 higher than class 3. And that has happened sometimes before. And that's why they used to take the average of the 3 and the 4 here in the last few years, and that's okay. But when we found a year ago when butter and powder was pretty flat, we did get an increased class 4 price. So strong butter price, strong powder price. And if I was looking at the class 3 futures jumping ahead here a little bit, they have class 3 futures running in the 19s starting the year, and class 3 to 18s higher. Whether that'll materialize, I question it, because normally after the holidays of Christmas and that, the price of butter does come down, and it's a question of whether powder can stay as high as it is.
Dr. Cropp, I kind of want to circle back to milk production and where that's being produced. Are we seeing cheese plants and bottling plants being, put up throughout the United States, or where is some of this milk coming from?
Well, the milk is kind of interesting there on milk production. What's going on is that nationwide, as I said, it's really slow. But we've seen, let's take California, what's the #1 milk producing state. Their production January through September is up about 1.6%. They haven't added any cows. A year ago, they had cow numbers down a little bit, but producing about the same. Not a big change. State like Wisconsin, however, a year ago, cow numbers were down 7,000 head due to telling farmers cut back in production, et cetera. And they produced only about 0.5% more milk. This year, Wisconsin production is up 3.1%. They've added 22,000 cows. You take a state like Texas, that has been growing for the last 4 or 5 years. A year ago, they had about 30,000 cows more than the year before, production up 7. This year so far, they've added 27,000 more cows, up about 5%. Another hot spot is the state of Indiana. That started a couple of years ago. Last year, they added 5,000 cows, production up over 6. This year, they're up about 8.5%, adding more cows. Your state of Iowa is doing pretty good. A year ago, the cow numbers were about the same. They produced about 1.6. So far this year, you're up 3.4. They've added 6,000 cows. Michigan, 4 years ago, Michigan ran out of plant capacity. They had to dump milk or ship their milk a long ways to find a market. Farmers were getting a very low milk price. They built a big milk plant up there. So last year, they started expanding already, adding 4,000 cows, up 2.6. This year, they're up 4.1, add another 12. The state of Minnesota is doing pretty good. A year ago, cow numbers were down. This year, the cow numbers up 11. They're up 4% in production. The hot spot, the fastest growing, is South Dakota, where a year ago, they had added about 10,000 cows, production of 11. This year so far, they're up 14% in production, added 20,000 cows. Now, what's driving this? I'm not always sure about Wisconsin where it's going. However, in Wisconsin, we've added some cheese plant capacity. But if you look at the state of Texas, 5 years ago, a big cheese plant built down there. They wanted more milk, more cows. And some people came from California to Texas. Indiana, Walmart built a big milk plant down there, and they needed more milk and cows. Michigan also built a big milk plant, and Southern milk goes up there. So Michigan, the big milk plant, built a lot largest in the country, more cows. Minnesota is also capitalizing on new cheese plant build in South Dakota. Same thing in Iowa. You had some cheese plant capacity. So I guess I'm simply saying you build the cheese plants and then you recruit more cows and expanded milk production. In the Southeast, milk production continues to decline.
So Dr. Cropp, do you think we'll see any changes to milk production to the end of the year just simply due to higher feed costs?
Well, I think with the high feed prices we're seeing and shortage of feed supply, we'll clearly see cow numbers keep them going down to the rest of the year. So I think we'll end up we'll end up probably for the year about 1.4% more milk, but decline off. And so I don't, and with higher feed prices is affecting higher culling, farmers getting rid of the lower producing cows. But also I think farmers that were thinking about any dairy expansions going on, put that on hold, because it's not all higher feed costs. It's also higher labor, materials, et cetera. So I think you're going to see production that continues slow going into next year.
We've focused on production. Let's change that focus a little bit and talk about demands in terms of domestic demand as well as export demand. What do you see happening,
Sure.
through this
well,
year?
Actually, with restaurants and the schools now in-person learning, we got people in the stands of sporting events. We have conferences back. We're not 100% back to normal, but we're back considerably. And so food service has really picked up. And so the domestic demand is doing pretty good, particularly cheese. Cheese sales are doing very well. Butter sales are good, not as much increase because last year with people eating at home rather than restaurants, they found out cooking with butter is pretty good. So last year, butter sales was a record. Land O'Lakes, the #1 butter producer, sold more butter than they ever sold. But butter is not pretty good. Milk that we drink, fluid milk, has been declining every year for the last 20 years. However, last year with at home eating, it actually increased. Now we're back to restaurants. So fluid milk sales, beverage milk sales are running about 5% lower than a year ago. But overall, we look for, unless something happens here with the virus shutting restaurants down again, we're looking for a strong growth domestically. The export market has been the bright spot in the dairy industry actually started last year. Exports are pretty good to continue on this year. September got this the other day is our last export report. We've had now 8 months of steady growth in exports over a year ago. In September, on a volume basis, we were up about 14% over a year ago, with strong growth in about everything. The non-fat dry milk is running about 16% higher, cheese over 20%, butterfat real strong, 223% higher, and whey up 5%. And I mentioned that whey is so important because if you get 6 pounds of whey out of 100 pounds of milk, so as that changes, it affects farm milk prices. What's driving this on the international market is that our prices of cheese and butter and non-fat dry milk are considerably lower than world prices. World price is quite high. World milk production has been down. And so if you compete with Western Europe, a big competitor, or New Zealand or Australia, we find our price is lower. And so countries are buying more of our product strong. Mexico has a year ago, a lot of economic problems that were affected by the virus. They're by far our largest market for dairy products. They were buying a lot less. They've come back into the market big on cheese. In fact, they were the #1 market for cheese last month, and a lot of powder. And I said, China has come back in. Particularly China buys a lot of whey products for the swine herd. 2-3 years ago, China faced the African swine fever. They lost a big share of their hogs. They weren't buying it. They're now building back that swine herd. So they're back buying that whey, and we've seen that increase in that whey price. They're also buying a lot of powder in that. So we're looking at a strong export market and pretty good domestic market continuing on this year going into next year.
So Dr. Cropp, as we wrap up our podcast here, I know you kind of alluded to some projected prices coming into 2022. Looking into your crystal ball, what do you think are projections looking into the next year?
Like I said, I've been doing Outlook for a long time. It used to be a piece of cake when the government big support program and didn't have this volatility. But I indicated here, milk prices are very sensitive to small changes in production, demand, or exports. I'm looking at a pretty good year price-wise. Reason for it, I do not see a big surge in milk production with the feed situation we have, higher feed prices, higher labor costs, machinery, et cetera. I look for cow numbers to continue to decline and production per cow being maybe average with the higher feed prices. The domestic demand, unless there is some disruption to do a shutdown in restaurants again due to the virus, it doesn't look that way. It looks optimistic that we'll continue more normal with in-person learning in schools and sport events. I look for a pretty good growth in domestic demand for cheese and butter, particularly. Fluid milk will probably continue to decline. And I understand the export market, I think will stay competitive. Price wise, it looks like world milk production, Western Europe is facing high feed prices. They're not looking for a big growth in milk production there for more exports. New Zealand, their production right now is running below year ago levels. So I think exports will hold up. So I'm looking at first quarter, I'm looking at a high 17 class 3, maybe drop down the middle class 3. Second quarter, and we finish out the year in good 18s in class 3. And look for class 4 also in the 17s. Now, if milk production does not increase, USDA just came out yesterday with their forecast. They're forecasting only an 0.8% increase in milk production next year. If that occurs, I'm low on milk prices. Class 3 right now did drop off. It came back yesterday. Cheese market, they're in the 18s all year, and they got class 4 in the 18s. That's very possible. So I think I do not see, unless we, if China stop buying whey and we drop back down to 40-cent dry whey rather than 66 cents, where we take $1 off the milk price. Things like that can do that. But so I'm looking at a pretty good year right now. I may be low, but we have to follow the market. We'll revise each month, but it looks like we should up with a pretty good year milk price wise.
And Fred, just a question for you. I know you work a lot with producers on risk management tools, and Dr. Cropp mentioned the increased volatility, and this is probably going to be the norm for dairy producers here in the next few years. So, as you work with producers, what risk management tools are you seeing producers utilize to protect their milk price?
In the comparison of 20 and 21, we had half of our producers using DMC. Now we're at 85%, and it's been a really good decision as far as managing risk, where we've had some strong payments because of the margin that dairy has right now. We're also seeing some pretty good action in the revenue protection program, but up until the last few weeks, it's really been maybe not as active. Recently, they've changed the LGM dairy from a monthly purchase to up to a weekly, and that I think really offers some good incentive to producers as we start seeing some of the hay and the corn price variation. So while it hasn't been used as actively over the past year, I think we'll see some action in that.
Right. I think one of the other things we've mentioned, just as people look at these risk management tools, to not forget the fact that we need to know what our costs of production are. So those financial analysis and kind of knowing what prices are profitable for us to lock in, I think tends to be important there as well. Dr. Cropp, any follow-up on any risk management tools?
I think I want to comment on the risk management tools. The first one I'm going to say is to have to sign up for the Dairy Margin Coverage Program. And they'll have a chance to sign up again in January, those farmers that are not signed up. A number of Iowa farmers have signed up for a 5-year under that program, and so they will make an annual decision. But those making annual decisions, they really backed off and last year because the price is there. So I think that's one. Right now, if you look at the futures market, there's opportunity for the revenue insurance program. And there's even the LGM dairy program in there. And class 3 futures and options are positive right now to lock in some profits. So some of the larger farmers look at that. For the smaller farmers, that's a little more difficult. So, but also a good share of the milk plants offer forward contracting right now. So I just simply say, I'm looking for a pretty good year. And, but we know what's happened in the past, things get disrupted and prices will go up and down. The class 3 futures is 18 pretty flat. We're not going to have flat price. We'll still have volatility. So I think farmers need to look for opportunities when it does arise to take advantage of some of those tools.
All right, Dr. Cropper, you're always a wealth of knowledge, and we thank you for joining us on this podcast. And we've certainly appreciated it. I was just kind of calculating. I think we've known each other for about 37 years when we're back at college, University of Platteville there as a teacher. You're my graduate advisor. Spent a lot of years in the industry, and not just foreman and working with the dairy industry itself and all your service to that, but also with the people of it. And just as a sideline, yesterday at the or 2 days ago at the Ag Lender Seminar, we actually had a lender in there, Jim Smith, who was actually with this seminar. So it's been 35 years, and he was with us since the very beginning. He's going to retire in December as well. But Jim and I took the time to actually give an appreciation certificate to Dr. Cropp for his many years of service, because he's presented at this conference for 30 plus years there as well. So again, just thanks for all you've done for the industry and for the people, and appreciate you joining on the podcast here.
Well, thank you. Well, I've enjoyed my career very much, and that's why it's been hard to say quit entirely. So I've been staying involved with it. It's been very enjoyable, and it's been great work with people like Larry. We've worked with you and outstanding county agents throughout Iowa and Wisconsin, and industry people. So it's been a fun time and enjoyable. I've enjoyed my career. Yep.
All right. Thanks again, Dr. Cropp and Fred and Larry, for being on the podcast. And out to our audience, thanks for joining us today, and look forward to visiting with you on the next Dairy News and Views from ISU.
This institution is an equal opportunity provider. For the full non-discrimination statement or combination inquiries, go to www.extension.iastate.edu/diversity/ext.